You're in store for a big event tonight. It's dividend investing versus day trading in a heavyweight battle to settle the score once and for all. These two players in the stock market have such different approaches. I'm really excited to see who walks away with the title belt after tonight. In the red corner, coming in with 5 monitors. Oh no, wait, he's got 8 monitors. Let's hear it for Day Trader Teddy. And in the blue corner, coming to the market with just his laptop and sometimes a phone. Let's hear it for Dividend Danny. Good evening, ladies and gentlemen, and let's take a look at the tail of the tape for this heavyweight matchup. Trader Teddy is quick moving. He's in and out of trades in mere seconds at times. You would definitely be surprised to see him in trades for much longer than a few minutes. Dividend Danny, on the other hand, is slow and methodical. He picks apart the market and invests for the long term. Most of Dividend Danny's investments are for many years. Knowing that Day Trader Teddy is in and out of trades in seconds or minutes, it can't be surprising that he will make tens or even hundreds of trades in a single day. Dividend Danny is much less active. He will buy a few stocks a month and sometimes sell some or all of a position to reinvest in another stock. Dividend Danny is making fewer trades in a month than Teddy is making in a single day. And tonight's fight is brought to you by the fine folks at Robinhood. Open a new Robinhood account and receive a free stock valued up to $500. Let's get back to the tail of the tape. If a stock isn't bouncing around, hitting highs or lows of day, Teddy won't even give it a second look. Sometimes Teddy is even known to dabble in penny stocks and stocks that are seeing huge influx of volume. Dividend Danny can't be bothered with penny stocks or incredibly high volatility stocks. His sweet spot is buying stocks of well-known, mature companies that are known to consistently pay out a dividend. We're talking about stocks like Coca-Cola, Pepsi, Realty Income, Caterpillar, McDonald's, Raytheon, Walmart, Target, and ADP. Dividend Danny takes the slow and steady approach. Danny is truly the tortoise in The Tortoise and the Hare. His goal is to turn $50,000 into $100,000 over the course of 5 to 10 years, depending upon the strength of the overall market. And even more important for Danny is developing a portfolio of stocks that will produce passive income for him for a long time to come. He is truly in it for the long haul. Big downturns in the market just present Danny with more opportunities to buy his favorite stocks at a discount. Trading Teddy takes more of the full speed with a nitro booster that you see in Fast and the Furious type approach. Teddy is looking to turn $50,000 into $100,000 in 1 year or less. Teddy doesn't really care which direction the market is going, as long as he can find stocks that are moving so he can hop in and out a few times and scoop up that big payday. Teddy's ambitious goals of doubling his account size in a year or less doesn't come without risk. His account can go up in flames in an instant. Teddy is trading with margin, which means that if he has $50,000 in his account, he's able to trade with $200,000, 4 times the amount of money that he has in his account. So any gains in his account are amplified, but losses are too, and this can be dangerous. 1 or 2 bad trades and his account can go up in smoke. Dividend Danny is on the opposite end of things here. There's no knocking him out of the market. If the stocks he owns go down in value, it's all paper losses until he sells, which he typically won't. Danny's account is safe, doesn't make use of margin, and is generally geared towards a long time horizon. One of the biggest risks Danny faces is his dividend stocks pulling the rug out from under him and cutting his dividend payment. But Danny knows how to bob and weave, and with the right strategy, he limits the likelihood of dividends being slashed. Danny just needs to learn a few metrics to look for and find dividend stocks to invest in and hold for a long period of time. He also learned how to identify periods when he might want to trim back a position and maybe invest in other stocks. Danny only focuses on a few key factors like revenue growth, earnings growth, dividend yield, payout ratio, the dividend history of the company, and simple measures of valuation of the company. Trading Teddy had to go through years of trial and error and learning the market. He's experimented with countless indicators like VWAP, MACD, RSI, moving averages, and plenty more. Day traders, especially new ones, are often looking for the holy grail of day trading setups that are going to produce massive returns day in and day out. But I hate to break it to you folks at home, it takes years to get good at day trading, and there is no holy grail. The market is always changing. Whatever works today might not work tomorrow. Dividend Danny can make his investments with just about any broker, and the information that he needs to make decisions is readily available on well-known websites like Yahoo Finance and Dividend.com. Day Trader Teddy requires specialized trading software and a broker that can get his orders to the market lightning fast. Teddy also benefits from premium news services and scanners that help him find trades to make throughout the day. And now, for the thousands in attendance and the millions watching on YouTube, let's get ready to invest! You be the judge here. You let me know, who do you think wins this fight? Dividend Danny or Day Trader Teddy? If you're interested in dividend investing, check out the playlist on the screen here. It has a few great videos on the advantages of dividend investing, as well as an overview of a few of my favorite dividend stocks. Alright, see you in that next video.